So there you have it. A little side discussion. I'm not sure how I managed to get off on the ESG stuff quite as much as I did, but a couple of articles this past week did catch my attention, particularly against the backdrop of the climate change summit that's happening in Dubai, of all places, and then a couple of articles in the Wall Street Journal over the course of the past couple of weeks. One of which noting that 2023 is the year where kind of the fantasy ended. Like all of this conversation about ESG ultimately boils down, as it always does, to is there profit and is there money to be made? And as investors, that's really the question that you should be always asking yourself, regardless of anything else. That's the bottom line. And the reality is that just did not hold water with ESG in terms of the underperformance. And investors really started to kind of speak in volumes on that, pulling out $14 billion in just the third quarter of this year from those types of investments. So it's one of those things where it does sort of set the stage for kind of a reminder of the financial fundamentals. So whether it's ESG or Y2K or .com or structured notes or crypto, or the list goes, equity linked products, those are all over the place. The list goes on and about the stuff that the financial services industry rolls out, markets, and it's kind of like New Coke. So it oftentimes falls flat. Maybe it's popular for just like a little bit, but ultimately it winds up going south very, very quickly. It's one of those expressions that we've used on the program before, which says, be an investor, but don't be a knucklehead. And sometimes you wind up getting too involved in these types of new products, things like that, that ultimately really do have a very limited shelf life, if you will, because at the end of the day, you might very well miss out on the ability to achieve return over time. And that's certainly what the second chapter of our new book, Next Gen Dollars and Cents, is all about. So on the program, in this segment and the next, we're going to talk about some of those financial fundamentals, because I think it bears repeating, particularly if you think about what's going on in the markets. As you were saying at the top of the show, the markets, if we think back to September, there was a 10% decline during the course of the months of August and September, and into October. That caught everybody's attention. There was a lot of concern, a lot of worry. And if you look at it historically, what most people forget is that a 10% decline during the course of any year is actually pretty normal. If you look at the averages, it happens about once every year if you look at it on a historical basis. So it's not that was abnormal. It's just that, once again, it causes the distraction to investors and really forces them or puts them in the position where they sort of start to ignore the fundamentals. So we asked the question at the top of the program, how have you done this year? How has 2023 been for you in terms of your investment performance? Because at the beginning of the year, it was widely expected it wasn't going to be a particularly good year. Certainly, there's been parts of the year where it haven't been particularly great. But as we sit here in December, things look on track that, hey, wait a minute, this could very well be, for a diversified portfolio, a year where you wind up getting a return that's sort of above even the long-term trend averages of that 8-9%. So that's good. But then the question is, if you're looking at your own personal portfolio and you haven't done that, well, then that's a problem, right? So maybe it does bear some repeating of some of those financial fundamentals, sort of a handful of essential truths. If you want to read more about these, our book, Next Gen Dollars and Cents, absolutely free of charge at any time between now and the end of this year. We're offering that book free of charge before you have to go to Amazon and buy it for $14.99. The reality is that you can call the office at 407-629-6477. That's 407-629-6477, and ask that we mail you your free hard copy of the book. Many times people are asking for multiple copies of the book, and we're perfectly fine with that. The free offer is an unlimited offer. So if you want to give those to your kids or your grandkids or your great-grandkids, this book we feel is a good resource for all of those ranges of financial things that you're going to encounter during the course of your lifetime, from the start to the finish. So, or you can visit our website, nelsonfinancialplanning.com, and request an absolutely free copy of the book from the website. My name, of course, is Joel Garris, and you're listening to Dollars and Cents here, coming to you on a host of radio stations throughout the Central Florida region. Also, one of the top 25 financial planning podcasts on the World Wide Web. So make sure you check us out there. Once you're there and you found us on whatever particular channel you happen to be on, subscribe to us, and then that way you'll get instantly notified when we upload new content as well. Have any trouble finding us on any of those platforms, go to our website, Nelson Financial Planning. There in the upper right-hand corner, you'll see a bunch of icons. Click on the one that looks most familiar, and lo and behold, you get redirected to our channel on your particular platform. So make sure you check us out there. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a great team of people who stand ready to help you change your life with a successful and cost-effective financial plan. Also going on at the office, forgot to mention this earlier, we will hold this up for our YouTube audience. Our toy and food drive has one more week. So if you're interested in stopping by the office and supporting Toys for Tots or Second Harvest Food Bank, we are collecting for both of those institutions. We've got two big, large bins from Second Harvest Food Bank where we're collecting food, and then a bunch of boxes that are already filled with toys, but there's always room for more, for Toys for Tots. That runs through at the office until Friday. So make sure if you are looking to participate that you drop that stuff by before Friday of this week on December the 8th. So let's talk a little bit about these fundamentals, because I think this year, as do most years, shapes out to be a good reminder of why it's important to remember the fundamentals. And I want to read you the quote that I included in that second chapter of the book when we talk about these fundamentals, because I think it really summarizes how you need to be thinking about investing from a long-term perspective. And it's a quote from Steve Jobs. And here's what it says. It says, simple can be harder than complex. Simple can be harder than complex. You have to work hard to get your thinking clear to make it simple. Let me read that again one more time. Simple can be harder than complex. You have to work hard to get your thinking clear to make it simple. The reality is that I think we could say that exact same thing on any of these various fundamental financial truths that exist, that ultimately, if you follow them consistently, you're going to ultimately achieve financial success. They sound simple, and that's the interesting part of all of these. All of these financial fundamentals that we're going to just chat through here on the program, you've probably heard them before, and they're not necessarily rocket science, and they're not necessarily anything grandiose or new. They're simple. They're simple concepts. But remember that quote. Simple can be harder than complex. You got to work very hard to get your thinking clear enough in order to make things simple. So without further ado, we'll start. Number one, time in, not timing. You've certainly heard us talk about this one before. My goodness, if I had a nickel for any time somebody says, Joel, you know what, I'm not going to invest right now. I'm going to put it off because I saw this headline or I saw this article, or these days I saw something on the internet, and I'm just not going to do it now because, you know, this ABC is going to happen and that's going to produce X, Y, Z. Look, folks, okay, time is the only thing that matters when it comes to achieving long-term investment results. In the book, we have a chart that talks about the period from 2007 to 2023. 2007, just prior to 2008. And that helps to really define why that time in concept is so important. And we're going to talk about more about that after the break here, after these messages here on Dollars and Cents with Joel Garris of Nelson Financial Planning.